Welcome to Next Level Credit, where we turn credit confusion into financial power. If you're ready to repair your credit, build business credit, and unlock the funding you deserve, you're in the right place. From step-by-step guides and insider tips to real success stories and expert strategies, we break it all down so you can level up your financial future, one smart move at a time. Subscribe now and take control of your credit, your business, and your life. It's not just about credit, it's about building your next level. Today I will be guiding you through step-by-step how to qualify for business loans with bad credit and how I got business funding with a 500 credit score. You've been told it's impossible. You've probably heard it a dozen times, maybe even from a loan officer sitting across a polished desk. I'm sorry, but with your credit score, and the rest just sounds like static. It's one of the most frustrating feelings an entrepreneur can have. Your dream is so close you can almost taste it, but the door gets slammed shut because of past financial mistakes. It feels like a wall. It feels like you're being punished for a history that has nothing to do with the brilliant business idea you've got right now. You have the vision, the drive, the plan. But the system just sees a number and says, no. But what if that wall is an illusion? What if getting a business loan with bad credit is not only possible, but thousands of entrepreneurs just like you are doing it every single day? They aren't magicians. They just have a different playbook. And today, I'm going to give you that playbook, page by page. We're going to tear down the myth that bad credit is a death sentence for your business. We'll break down the exact strategies and specific, often overlooked, loan options that can get you the cash you need to build your empire. So, forget what the banks told you. Your real financial education starts now. 1. The impossible wall. Why bad credit scares lenders. Before we can tear down this wall, we have to understand how it got built in the first place. Why do lenders put so much weight on a single number? Look, I know it feels personal, but to them, it's not. It's about one thing: risk. A lender is in the business of managing risk. When they loan out money, their main question isn't, is this a great idea? It's, what are the odds I'll get this money back, plus interest? Your personal credit score is their favorite shortcut for answering the question. A FICO score, usually from 300 to 850, is like a highlight reel of your financial past. A low score, generally anything under 670, and especially below 600, tells them you've had trouble with debt before. That could be late payments, maxed out credit cards, collections, or even a bankruptcy. To a lender, these are red flags that you might be a higher risk for default. For a new or small business, this is a huge problem because lenders see you and your business as the same thing. You don't have years of business tax returns or a long track record of business credit. So, they lean almost entirely on your personal history. This is where the dreaded personal guarantee comes in. A personal guarantee is a legally binding promise that if your business can't repay the loan, you will. This means they can come after your personal assets, your car, your savings, even your home. With bad credit, a personal guarantee is almost always on the table, and even then, it might not be enough for a traditional bank. This whole thing creates a vicious cycle. The big banks, the ones with the best interest rates, often have automated systems that kick out applications below a certain credit score before a person ever even sees them. Your application is dead on arrival. This pushes entrepreneurs like you into a shadier corner of the financial world. You start seeing ads for loans with guaranteed approval and no credit check. These are often predatory lenders looking to trap you in a cycle of debt with insane interest rates and impossible terms. It's a landscape designed to make you feel desperate and to cash in on it. You feel stuck, thinking your only options are a hard no from the bank or a dangerous yes from a loan shark. This is the wall. It's built from risk formulas, automatic rejections, and predatory greed. But every wall has a door, and I'm about to show you where the keys are. 2. The pivot. Shifting your mindset and strategy. Okay, so we've laid out the problem. The traditional system isn't built for you. Trying to play by their rules is like trying to unlock a door with the wrong key. You're just going to get frustrated. So, we stop. We stop banging on the door of the big banks. We stop seeing our credit score as a permanent brand on our foreheads. This is the pivot. Here's the fundamental shift in your thinking. Your goal is not to magically fix your credit score overnight. Your goal is to make your credit score less important in the loan equation. You do this by changing the equation itself. You need to stop talking to lenders who only see a score and start finding lenders who are able to see a business. This isn't just wishful thinking, it's a complete change in strategy. This new strategy is built on 2 pillars that we're going to break down completely. Pillar 1. Forging your armor. This is all about strengthening every other part of your application so much that your credit score becomes a footnote, not the headline. We're talking about a business plan that is so compelling it demands respect. We're talking about showcasing your cash flow in a way that proves you can repay the loan, no matter what your past looks like. And we're talking about building your business's own financial identity, separate from you. This is the work you do on your business to make it undeniable. Pillar 2. Finding the right door. This is about knowing where to take your newly armored application. The world of lending is so much bigger than the big banks you see on every corner. There's a whole universe of alternative lenders, non-profit organizations, and government-backed programs designed specifically to fund the very people that traditional banks turn away. These lenders use different scorecards. They look at your character, your plan, your role in the community, and your actual business performance. They have different missions and different ideas of what makes a good investment. When you combine these two pillars, a bulletproof application and a targeted search, you change the game. You're no longer begging for a handout. You're making a solid business case to a lender who is actually ready to listen. This is how you go from being a bad credit risk to a fundable entrepreneur. Let's start by forging your armor. 3. Forging your armor, strengthening your application, the you factor. This is where we go on the offensive. This is all about the real, tangible steps you can take to build an application package so strong, it forces lenders to look right past your credit score. We're going to build a fortress around your business. A. The unbeatable business plan, your narrative of success. Most people treat a business plan like a boring homework assignment. They download a template, fill in some blanks, and call it a day. This is a huge mistake. For you, the business plan isn't just a document, it's your weapon. It's your chance to tell your story, to control the narrative, and to prove to a lender that you're a sharp, forward-thinking CEO, not just a person with a low FICO score. A great business plan shows you get your market and have a clear strategy to manage risk and make money. So what does an unbeatable business plan look like? It has 3 sections you have to nail. First, the executive summary. This isn't just an intro, it's your elevator pitch on paper. You'll write it last, but it's the first thing a lender reads. It needs to be sharp, short, and powerful. In 1 or 2 pages, it has to clearly state your mission, your product, your market, and a quick summary of your financials and how much you're asking for. It should grab them and make them want to know more. Second, the market analysis. This is where you prove you've done your homework. Don't just say, people love coffee, give them data. Who are your competitors? What are their weaknesses? What makes you different? Who, exactly, is your ideal customer? Use real data, industry reports, and research to show that you understand the battlefield. This tells a lender you aren't just taking a wild guess, you've found a real opportunity. Third, and most important, the financial projections. This is the heart of your whole case. You need detailed, realistic financial forecasts for the next 3 to 5 years. This includes your projected income statement, balance sheet, and the absolute king, the cash flow statement. Lenders care more about cash flow than almost anything. It shows them exactly how you plan to pay them back. Don't just make up numbers. Base them on your market research and clear assumptions. For example, we project selling 50 units a month based on the foot traffic of our location and the average sales of 3 similar local businesses. That level of detail builds massive credibility. B. Cash flow is king. Proving your ability to pay. There's a saying, profit is an opinion, but cash flow is a fact. You can be profitable on paper but have no cash in the bank to pay your bills. Lenders get this. They need to see that your business generates enough real cash to cover its expenses and the new loan payment. For a business with bad credit, having strong, consistent cash flow is the single most persuasive piece of evidence you can have. How do you prove it? With bank statements. You need at least 6 months, but preferably 12, of business bank statements. They should show consistent deposits and a healthy average balance. If your revenue is a mess, a mix of cash, Venmo, and personal account deposits, clean it up now. Run every single dollar through a dedicated business bank account. This is non-negotiable. Use accounting software to generate professional-looking financial statements. Specifically, you need your historical cash flow statement and your income statement, also called a profit and loss, or P&L. This shows a lender you're organized and on top of your money. What if your cash flow isn't great yet? Work on it before you apply. Focus on getting paid faster by your customers. Offer a small discount for early payment. Start taking online payments. On the other side, see if you can get longer payment terms from your suppliers to keep cash in your account longer. Every little bit helps build a stronger case. C. The power of skin in the game, collateral and down payments. Remember, lending is all about reducing risk. One of the best ways to reduce a lender's risk is to share it. You do that by offering collateral or making a bigger down payment. Collateral is a valuable asset you pledge to secure the loan. If you default, the lender can take that asset to get their money back. This could be equipment, inventory, accounts receivable, or real estate. If you need a loan for a new piece of equipment, that equipment itself usually serves as the collateral, which makes those loans easier to get. Pledging assets can feel scary, but it shows the lender you're confident you can repay the loan and that you have something to lose. It makes you a partner in the risk. A down payment works the same way. When you put a good chunk of your own money into the project, you're lowering the amount the lender has to risk. If you need a $50,000 loan to buy equipment, an application with a $2,000 down payment is way weaker than one with a $15,000 down payment. A bigger down payment shows you're committed and financially stable, which can be a huge factor for a lender who's on the fence because of your credit score. D. Building your business's financial identity. Finally, you need to start playing the long game by building your business's credit history, completely separate from your personal credit. This won't solve your immediate loan problem, but it's a critical step to make future borrowing much easier. A strong business credit profile will eventually let you get loans and credit lines without a personal guarantee. First, officially separate your business and personal finances. If you haven't, get an employer identification number, EIN, from the IRS. It's free and takes minutes online. Use that EIN to open a business checking and savings account. All business money must flow through these accounts. Next, get a business credit card. Even if it's a secured card where you put down a cash deposit, get one. Use it for small, regular business expenses, and pay the bill on time, every time. Then, start working with vendors and suppliers who report payments to the business credit bureaus, like Dun & Bradstreet or Experian Business. These are often called net 30 inches accounts, where they give you 30 days to pay an invoice. Companies like Ullin, Granger, and Quill are known for this. Paying them on time is one of the fastest ways to build a business credit file. By taking these steps, crafting a killer business plan, proving your cash flow, offering skin in the game, and building a separate credit identity for your business, you completely change how lenders see you. You're no longer just a FICO score. You're a serious business owner with a viable plan. Now, let's take this armored application and find the right door. 4. Finding the right door. Specific loan options for bad credit. This is the part of the playbook most entrepreneurs with bad credit never get to. They knock on one door, the big bank, and when it stays shut, they think all doors are locked. But the financial world is huge, and some lenders have made it their mission to fund people just like you. The key is knowing who they are, what they want, and what they offer. Let's go open some of these doors. A. The hidden gem, SBA microloans. When people hear SBA loan, they usually think of a huge, complicated loan that's impossible to get. But they're thinking of the standard SBA 7A loan. There's another program that is a total game changer for people with bad credit, the SBA microloan program. Here's the secret most people miss: the SBA doesn't actually lend you the money. Instead, the SBA gives funds and a government guarantee to a network of intermediary lenders, which are usually non-profit, community-based organizations. These groups then lend the money out in small amounts, up to $50,000. The average microloan is actually much smaller, around $13,000. Why is this perfect for you? Because these community lenders have a different mission. They aren't trying to maximize profit. Their goal is to boost their local economies, especially by supporting startups and underserved entrepreneurs. Because of that, they look at more than just your credit score. They put a huge emphasis on your business plan, your character, your experience, and the impact your business will have. While they do check your credit, they are much more forgiving of a low score if the rest of your application is solid. These loans can be used for working capital, inventory, supplies, and equipment. Terms are often flexible, going up to 7 years, with reasonable interest rates, typically between 8% and 13%. You can find an SBA microlender in your area by going to the SBA's website and using their Lender Match tool. This is often the best first stop for any entrepreneur with bad credit. B. The mission-driven money, non-profit and community lenders beyond the official SBA program. There's a whole world of non-profits and community development financial institutions, CDFIs, that exist to provide fair capital to people who are locked out of the traditional system. A great example is Axion Opportunity Fund, AOF. AOF is a non-profit lender that specializes in funding businesses owned by women, people of color, and low to moderate income entrepreneurs. They say outright that they look beyond credit scores to see your business's potential. Their typical requirements are being in business for at least a year and having at least $50,000 in annual sales. They offer loans up to $250,000 with fair, transparent interest rates. What really makes groups like AOF different is that they offer more than just money. They provide business coaching, mentoring, and support networks. They invest in your success *, not just in the loan. Finding a local or national CDFI that fits your business can be an incredible partnership. C. The new frontier, online and alternative lenders. In the last decade, a new type of lender has exploded, online or fintech lenders. These companies use tech to make the application process super fast, often giving you a decision in minutes and cash in as little as 24 hours. Their big advantage is speed and easier credit requirements. But, and this is a big but, that convenience almost always costs you more in the form of higher interest rates and fees. For a business with bad credit, this is often a trade-off you have to make to get cash quickly. It's critical to understand their different products. Short-term loans. Companies like On Deck and Fora Financial offer lump sum loans that you repay over a shorter time, like 6 to 24 months. Repayments are often taken from your bank account daily or weekly. Their credit score requirements are lower than banks. For instance, Fora Financial may accept scores as low as 570. These are best for immediate needs, like buying a big batch of inventory. Merchant cash advances, MCAs. This is a common but tricky option. An MCA isn't technically a loan. You're selling a piece of your future sales at a discount. A company gives you a lump sum of cash in exchange for a percentage of your daily credit and debit card sales until the advance is paid back, plus their fee. Because repayment is tied to your sales, your credit score is much less important than your history of consistent sales. This can be a lifeline for a retail store or restaurant. Warning: MCAs use a factor rate instead of an APR, which can be confusing and hide a sky-high effective interest rate. Be extremely careful and calculate the true cost before you sign anything. Invoice factoring and invoice financing. This is a fantastic option for B2B businesses that have to wait a long time to get paid. If you have unpaid invoices from reliable customers, you can use them to get cash now. With *invoice factoring *, you sell your unpaid invoices to a company, like Altline, at a discount. They give you a big chunk of the invoice value up front, say, 85%, and then they collect the full payment from your customer. Once it's paid, they give you the rest, minus their fee. In this case, the lender cares more about your customer's creditworthiness than your own. Equipment financing. As we mentioned, if you need to buy a specific piece of equipment, this can be one of the easiest types of loans to get, even with bad credit. Why? The equipment itself is the collateral. If you stop paying, the lender just takes the equipment back. This lowers their risk, making them much more willing to work with you. D. Peer-to-peer, P2P. Lending. Peer-to-peer lending platforms are like matchmakers. They connect business borrowers directly with investors who want to fund loans. By cutting out the bank, they can sometimes offer more flexible terms. While they do have credit score minimums, they're often lower than banks and they look at a wider range of factors. This can be a good middle ground between the strictness of a bank and the high cost of some online lenders. By understanding this diverse landscape, you can see that a no from one place means very little. Your job is to match your situation and your strong application to the lender whose mission and model are the right fit. Stop wasting energy on doors that will never open. Focus on the ones that are already unlocked, waiting for you. 5. The red flags. How to spot and avoid predatory lenders. Now that you know where to look for money, we need to have a serious talk about the sharks in the water. Because you might feel vulnerable, you're a prime target for predatory lenders who want to profit from that desperation. They use shady, unfair practices to trap you in loans that are almost impossible to pay back. Knowing the warning signs isn't just helpful, it's essential for your financial survival. Here are the critical red flags to watch for. That guaranteed approval, promise. This is the biggest red flag of all. No legitimate lender can guarantee approval without looking at your finances. A promise of guaranteed approval, especially with no credit check, is almost always a trap. They're preying on your fear of rejection. Extreme pressure tactics. A predatory lender will try to rush you. They'll say things like, "This offer is only good for today," or "You have to sign now to lock in this rate." They do this so you don't have time to read the fine print, compare offers, or get advice. A good lender will want you to take your time and understand everything. Lack of transparency. If a lender is cagey about the total cost of the loan, run. They must be able to clearly explain the annual percentage rate, APR, which is the total cost of borrowing, including interest and all fees. Predatory lenders often hide fees in the fine print or use confusing terms like factor rates to hide how expensive the loan really is. If they can't give you a clear, simple breakdown of all costs, walk away. Upfront fees. A lender should never ask you to pay an application fee or insurance fee before your loan is approved and you've signed an agreement. These are often just scams to take your money. Real origination fees are usually taken out of the loan money after it's funded. No reporting to credit bureaus. One of the side benefits of getting a loan and paying it on time is that it should help you rebuild your credit. Predatory lenders often don't report your good behavior to the credit bureaus. This means even after you pay off their expensive loan, you get no credit building benefit, keeping you stuck in the same bad credit ecosystem. The best way to protect yourself is simple: trust your gut. If an offer feels too good to be true, it is. Read every single word of a loan agreement before you sign. Calculate the total payback amount and compare it to what you're borrowing to see the real cost. Ask a ton of questions. A legitimate lender will have clear answers. A predatory one will get defensive or just apply more pressure. Your business is too important to risk on a deceptive loan that could destroy everything you've built. You now have the complete playbook. You know why the old system wasn't working, how to build an application that demands respect, where to find lenders who actually want to say yes, and how to spot the sharks. You have a real roadmap to get the capital your business deserves. If this guide was valuable to you, if it opened your eyes to new possibilities, the best way to support this channel is to hit that subscribe button and turn on notifications. We put out content just like this every single week to empower entrepreneurs like you. I also know this is a lot to take in. To make it easier, I've put all of these strategies, lender types, and red flags into a free, one-page resource, * the Bad Credit Business Loan Checklist. You can download it instantly with the link in the description. Print it out, use it, and make sure you don't miss a single step. And finally, if your situation is unique and you feel you need some one-on-one guidance, there's also a link in the description where you can book a private consultation with my team. We can help you build your strategy and connect you with the right people. Now let's talk about how I got business funding with a 500 credit score. The email was so cold. So brutally simple. Just a few words: "We regret to inform you that," I didn't even need to read the rest. It was the seventh one. The seventh bank that had looked at my business, my dream, and then my 500 credit score, and said, "No, this business wasn't just a side hustle. It was my way out. My future." And with every rejection, I could literally feel the walls closing in. My dream had a price tag, and that 3-digit number was telling me I was bankrupt before I even had a real shot. I felt like a complete failure. Like the world had already decided my story was over before it began. But what the banks, the algorithms, and those cold rejection letters didn't know, is that I'm stubborn. And I refused to let my dream die. It's a horrible feeling, right? To know you have a great idea, a work ethic that won't quit, but you're stopped dead in your tracks by a number. A number that's supposed to define how reliable you are. For me, that number was 500. And in the traditional finance world, a 500 FICO score isn't just bad credit, it's a giant red flag that tells lenders you're a risk they're not willing to take. My business was a small, custom woodworking shop. I started it in my garage with second-hand tools and a love for creating things that last. And it was working. I had customers, I had orders, I had proof that my idea was solid. But I hit a ceiling, and I hit it fast. I needed a professional-grade CNC machine to take on bigger, more profitable jobs. I needed to buy lumber in bulk to get my costs down. I needed a little bit of cash for payroll so I could hire some part-time help and stop working 18-hour days. I wasn't asking for $1 million. I needed $25,000. For me, it was everything. To the banks, it was a rounding error they wouldn't risk on me. The rejections were soul-crushing. First, the big national banks. Those were just automated, impersonal emails. Denied. The algorithm probably tossed my application the second it saw a credit score starting with a 5 feet. Most banks want to see a score of 690 or higher, and I was nowhere close. So then I tried smaller, local community banks. I thought, hey, maybe if I can talk to a real person, I can explain. I could show them my order book, my customer reviews, my business plan that I'd poured my soul into. I actually got one meeting. A loan officer sat across from me, looked at my file with this polite but firm expression, and said, "I'm sorry, with this credit history, our hands are tied. Our hands are tied." Those words echoed in my head for weeks. It felt like my hands were tied. I spent nights just staring at the ceiling, numbers running through my head. The cost of the machine, the cost of materials, the fact that my business bank account was slowly draining. The self-doubt started to creep in. Was I just fooling myself? Were the banks right? It's a lonely place to be, feeling like your future is being held hostage by your past. And I know I'm not the only one who's ever felt that way. 1. The harsh reality of a 500 credit score. So before I tell you how I turn things around, we need to have a really honest chat about what a 500 credit score actually is, and why it sends traditional lenders running. It's not just a low number, it's a story. And to a bank, it's a horror story. FICO scores range from 300 to 850. Anything under 580 is considered poor, so 500 puts you squarely in the high-risk zone. To a lender, that number screams, I might not get my money back, and their entire business is built on getting their money back. It suggests a history of late payments, loans in default, maybe even a bankruptcy. My score wasn't because I was irresponsible. A few years back, another business I was a partner in went under. It went sour, and it left me with a mountain of debt I was slowly trying to pay off. It was a brutal lesson, but the credit bureaus don't care about the story. They just see the data. This is the ultimate catch-22 for entrepreneurs. You need money to build a business that can make you money, so you can fix your credit. But you can't get the money because your credit is bad. It's like being told you can't have a glass of water until you're no longer dehydrated. It's maddening. And the fallout from bad credit goes way beyond just loans. It can mean higher insurance premiums, getting denied for a commercial lease, or even suppliers refusing to give you payment terms. It feels like you're playing the game of business on the highest difficulty setting with one hand tied behind your back. I had to face it. Wallowing wasn't going to buy that CNC machine. The front door, the bank loan, was bolted shut. It was time to find a back door, a side window, or start digging a tunnel. 2. The turning point. Getting mad and getting to work. There's a moment every entrepreneur faces, a fork in the road. You can either accept the verdict the world has handed you, pack it in, and find a safe job. Or, you can get angry. You can get determined. You can decide that you get to write the ending to your story. For me, that moment came right after that 7th rejection. I was sitting in my truck, that loan officer's polite, pitying smile burned into my brain. I felt that familiar sting of failure. But then, something else kicked in. Just pure defiance. No. I wasn't letting this be the end. I had poured too much of myself into this. My customers believed in me. I believed in my work. The only thing broken here was the system. So, I decided to stop playing their game and learn a new one. That night, I didn't sleep. But this time it wasn't from anxiety, it was from pure adrenaline. I fired up my laptop and went down the rabbit hole. My first Google search was as simple and desperate as it gets: business loans for bad credit. The results were a tidal wave. An overwhelming mix of legit-looking finance companies and really sketchy sites promising guaranteed approval. No credit check. I knew immediately this world was a minefield. Predatory lenders love people like me, people who are desperate and have been told no everywhere else. They dangle fast cash but hide insane interest rates and fees in the fine print. Some of these things, like merchant cash advances, can have APRs that are well into the triple digits. I felt a new kind of fear. Not the fear of being rejected, but the fear of making a terrible decision that would kill my business for good. I could jump out of the frying pan of bank rejections right into the fire of a predatory loan that would bleed me dry. I couldn't just click the first ad I saw. I needed a plan. I had to become an expert in this new, alternative finance world. So, I opened a spreadsheet. I started taking notes, categorizing the different types of funding I found. I read reviews, watched videos, and slowly started to build a map of this new territory. It wasn't a panicked search anymore. It was research. It was a mission. I was done being a victim of my score. It was time to be the architect of my own solution. 3. Navigating alternative lending. My big discovery this part of the journey was like learning a whole new language, the language of alternative finance. It turns out, when banks say no, there's a whole world of other companies that have built their business on saying yes, just with different rules. The key was figuring out those rules and seeing what fit. I learned that my bad credit score wasn't the only thing that mattered. Some lenders cared more about the health of my actual business. Here's what I found. First, I ran into short-term loans. These were everywhere. Companies like On Deck and Fora Financial kept popping up. They offer loans like a bank, but for shorter time frames, usually up to 24 months. The appeal was speed, fast decisions, fast funding. The requirements were also looser than a bank's. While they had credit score minimums, they were lower. On Deck, for example, looks for a score around 625, but other lenders go lower. What they cared about more was my business's current income. On Deck, for instance, requires at least $100,000 in annual revenue. My business was on track for that, so I was in the game. The downside? The interest rates were way higher than a bank's. I had to do the math. Would the profit from the new CNC machine be more than the high interest I'd be paying? Then, I found merchant cash advances, MCAs. This was a totally different beast. An MCA isn't even technically a loan. A company like Credibly or Giggle gives you a lump sum of cash. In return, they take a fixed percentage of your daily credit card sales until they get their money back, plus a fee. The big advantage here was that they cared way more about my daily sales than my credit score. Many MCA providers work with businesses with scores of 500 or higher and have been operating for at least 6 months. If my sales dipped, my payment dipped too, which sounded flexible. The cons were huge, though. The cost can be insane. They use something called a factor rate instead of April, which makes it really hard to see the true cost. An MCA can be a lifesaver, but it can also be a debt trap. I also learned that these usually don't get reported to business credit bureaus, so it wouldn't help me rebuild my credit. That was a big drawback. I didn't just want cash, I wanted a way back. The aha moment, invoice factoring. This is where a light bulb really went on. Invoice factoring isn't a loan at all, it's when you sell your unpaid invoices. Here's how it works. I had about $15,000 in outstanding invoices from clients with 30 or 60-day payment terms. A factoring company, like Altline or Factor Finders, would literally buy those invoices from me. They'd give me a big chunk of the money, like 90%, right away. Then, they would collect the payment from my customer. Once the customer paid them, they'd give me the rest of the money, minus their fee. The incredible part? My personal credit score barely mattered. The factoring company wasn't betting on me asterisk, they were betting on my customers. As long as my clients were reliable and paid their bills, I was good to go. This felt like a total game changer. I was using my customers' good credit to solve my cash flow problem. This felt less like taking on debt and more like unlocking money that was already mine. Plus, some factoring companies can report your activity to help build your business credit. A perfect fit, equipment financing. Since a huge reason I needed money was for that CNC machine, I looked into equipment financing. This is another type of asset-based lending where the loan is secured by the very thing you're buying. If you default, the lender just takes the equipment back. Because they have that collateral, the credit requirements are way more flexible. I found lenders who specialize in this and are willing to work with lower credit scores because the machine itself cuts their risk way down. This just felt like a direct, logical way to get the machine without all the drama. A beacon of hope, microloans and non-profits. Finally, I stumbled into a corner of the lending world I barely knew existed, non-profit lenders and community development financial institutions, CDFIs. Organizations like Axion Opportunity Fund are mission-driven. Their whole purpose is to help underserved entrepreneurs, people with bad credit, minorities, and women. Axion Opportunity Fund, for example, looks beyond just the credit score. They want to see the whole picture of you and your business. They offer fair interest rates and, more importantly, they offer coaching and resources. It wasn't just a transaction, it felt like a partnership. Applying to a place like this felt completely different, like I was being seen as a person with potential, not just a number with a bad history. The loan amounts are often smaller, they're called microloans for a reason, usually under $50,000, but that was exactly what I needed. I went from feeling like I had zero options to having 5 real, distinct paths I could take. The despair was gone, replaced by a sense of control. The question wasn't, can I get funding, anymore. It was, which type of funding is the right type for me? 4. Preparing the application. My game plan, knowing the options, was one thing, getting approved was another. With a 500 credit score, I knew every other part of my application had to be flawless. I couldn't look unprepared. I had one shot with these lenders, and I was going to make it count. Step 1. Getting real about my needs. First, I got brutally honest about the numbers. It was tempting to ask for more, but I resisted. I created a detailed use of funds list. It wasn't just $25,000 for stuff. It was CNC machine, model XYZ, $16,500 bulk oak lumber purchase, $6,000 part-time helper, 15 hours, WK for 2 months, $2,500. This showed lenders I had a precise, strategic plan for every dollar. It proved I wasn't just patching a leak, I was investing in growth. Step 2. Getting my paperwork in order. Even though these alternative lenders are flexible, they still need to see your books. I gathered everything I could to paint a full picture of my business, a polished business plan. I updated the one I'd shown the banks, focusing on the new revenue I could generate with the equipment. Financial statements. I prepared my balance sheet and income statements. They weren't perfect, but they showed growth. Bank statements. I printed out the last 6 months of my business bank statements to clearly show my consistent cash flow, a huge deal for online lenders. Tax returns, both personal and business. A list of collateral. I listed any assets I owned outright that could be used as collateral. My order book and customer reviews. I printed my current list of open orders and pages of glowing testimonials. This was my proof that people wanted what I was making. Having this package ready made me look serious and organized. It built trust right from the start. Step 3. Choosing my path. With all my documents ready, I decided a blended approach was best. That invoice factoring seemed like a no-brainer. It was fast cash that wasn't a loan. That could cover the lumber and payroll right away. For the CNC machine, the equipment loan was the perfect fit. The machine itself was the collateral, making my credit score less of an issue. But I also decided to apply for a small microloan from Axion Opportunity Fund. I was really drawn to their mission and the idea of getting coaching. Even if it was a smaller amount, building a relationship with a CDFI just felt like a smart long-term move. So that was my 3-pronged attack. 1. Invoice factoring for instant cash. 2. Equipment financing for the big machine. 3. A microloan for a little cushion and a new partner. I tailored each application. For the factoring company, I stressed how reliable my customers were. For the equipment lender, I gave them the exact specs of the machine. For Axion Opportunity Fund, I told my story. I focused on my passion and my vision. By the way, I'm getting into the nitty-gritty here because I know how frustrating this all is. If you're in this spot right now, feeling totally overwhelmed or beat down by rejections, do me a favor and drop a comment below. What's your single biggest hurdle? The credit score? The paperwork? Finding a lender who will listen? The community here is awesome, and I promise you're not in this fight alone. We can share what we've learned and cheer each other on. Don't underestimate how much it helps to know you're not the only one. 5. The approval. The yes I'd been waiting for. The first yes came from the invoice factoring company. It happened so fast I thought it was a mistake. I submitted everything on a Tuesday morning. By Wednesday afternoon, there was an agreement in my inbox. I read it 3 times, looking for the catch. The fees were exactly what they said they would be. I signed the digital contract, and a few hours later, my phone buzzed. A wire transfer notification. Over $13,000. Just like that. I just stared at my phone. It wasn't a loan. It was my own money, finally freed from invoice jail. A weight I didn't even know I was carrying just lifted off my shoulders. I immediately called my lumber supplier and placed the order I'd been dreaming about for months. That one phone call, made possible by that one yes, felt bigger than any milestone I'd hit before. A week later, the equipment loan came through. Because I'd done my homework and the loan was secured by the machine itself, my 500 credit score was a hurdle they were willing to jump. The loan officer I talked to was the total opposite of the guy at the local bank. He was focused on the future, on the revenue the machine could bring in, not on my past. When his email arrived with the subject line, "Congratulations, your equipment loan is approved," I actually let out a yell in my workshop. It was just pure relief and victory. This was the big one. This was the key to the next level. But the most emotional moment came a week after that. I got a call from a number I didn't recognize. It was a woman from Axion Opportunity Fund. She told me she'd read my application, my story. She didn't start with my credit score. She started by asking about my woodworking, about my passion for it. We talked for 20 minutes about my business, my goals. And then she said the words that almost brought me to my knees. "We believe in what you're doing," she said, "and we'd be honored to be a part of your journey. We've approved you for a $5,000 microloan." I was speechless. It wasn't the money. It was the "we believe in you." After months of feeling like an outcast, being told no by a system that felt designed to keep me down, hearing those words was everything. It was validation. It was respect. It was hope. In just 2 weeks, I'd gone from having my back against the wall to being fully funded. I had the money for my equipment, my materials, and a new employee. The dream wasn't dying. It was roaring back to life. 6. The transformation, putting the money to work, getting the funding, was the peak of the struggle, but it was just the start of the real story. The change that followed was incredible, and it happened almost overnight. First thing I did was order that CNC machine. The day it arrived on a flatbed truck was like Christmas morning. It was this huge, powerful symbol of my win. I spent the next week just learning the software and running tests. The impact was immediate. A job that used to take me 20 hours of painful, manual labor? Now I could do it in 3 hours, and with better precision. This didn't just make me faster, it completely changed the math of my business. My capacity exploded. I could suddenly take on 3, 4, even 5 times as many projects. The bulk lumber purchase was just as huge. My material costs dropped by almost 30%. That saving went straight to my bottom line. It also meant I had this amazing inventory of beautiful wood right in my shop. When a new client came in, I could walk them over to the rack so they could see and touch the exact piece of wood that would become their table. It was an amazing sales tool. And with the microloan from Axion, I hired my first part-time employee, a young woman from a local trade school who was excited to learn. This, maybe more than anything, changed my life. For the first time, I wasn't alone. Having help with sanding, finishing, and assembly freed me up to focus on designing, talking to clients, and actually growing the business instead of just surviving in it. Those crushing 18-hour days turned into manageable 10-hour days. I actually started having a life again. My business wasn't just surviving anymore, it was thriving. Within 6 months, my revenue had tripled. I was taking on commercial projects for local restaurants and offices, jobs I could have only dreamed of before. I was more profitable, less stressed, and more in love with my work than ever. The funding wasn't just about money. It was about breathing room. It was about capacity. It was about confidence. It was the fuel my engine had been starving for. 7. Lessons learned and how I'm building for the future. This whole journey taught me more than any business school ever could. Here are the lessons I carry with me every day. Lesson 1. Your credit score is a data point, not your destiny. This is the biggest one. That 3-digit number does not define you, your work ethic, or what you can achieve. Banks might use it as a simple filter, but the world of money is bigger than that. Your business has its own strengths, your cash flow, your customers, your plan. I learned to stop seeing my 500 score as a brand of failure and started seeing it as just one variable in a much bigger equation. Lesson 2. Preparation is your best weapon. When you have a weak spot, like a low credit score, you have to be extra strong everywhere else. Having a complete, professional, organized package of documents makes a world of difference. It shows you're serious and you've done your homework. Don't give them any easy reason to say no. Lesson 3. Explore every option. Don't assume banks are the only game in town. The financial world has changed. There are so many alternative lenders, non-profits, and special financing products out there. From invoice factoring to equipment loans to microloans from CDFIs, there is probably a solution that fits your exact need. You just have to be willing to do the research and find it. Lesson 4. Rebuilding is a long game. Getting the funding was just the start of my financial comeback. I became obsessed with making every payment on time. Every on-time equipment loan payment helped my credit. I've also opened a business credit card, used it for small things, and paid it off in full every single month. It takes time, but every single responsible step lays another brick in the stronger financial foundation. Lesson 5. Learn to spot the sharks. The alternative lending world has a lot of great players, but it's also got predators who feed on desperation. Be super wary of anyone promising guaranteed approval or pressuring you to sign right away. Always ask for the April to understand the true cost. If a lender is shady about their fees or uses confusing terms they can't explain clearly, run. Always compare offers and trust your gut. If a loan seems too good to be true, it is. Conclusion: let's bring it all home. The one message I want you to leave with today is that your credit score does not define your destiny as an entrepreneur. It's a hurdle, not a wall. It's a piece of your past, not a prediction of your future. For years, you might have believed that your options were few and far between. That ends today. You now understand the 2 pillars of success. First, you armor up your application from every angle: your business plan, your cash flow, your business's own financial identity, to make your case undeniable. And second, you stop knocking on the wrong doors and instead target the specific lenders who are built to serve you: the SBA microlenders, the non-profit CDFIs, and the legitimate online lenders. Getting a business loan with bad credit isn't about luck. It's about strategy. It's about knowledge. It's about refusing to take no for an answer. Your business, your dream, your vision, it is so much more than a 3-digit number. You have the grit to be a successful entrepreneur. Now, you have the financial playbook to back it up. Go build something incredible. And also, looking back, the journey was brutal. Those rejection emails hurt. The sleepless nights were awful. But I honestly wouldn't trade it. It forced me to become more resourceful, more knowledgeable, and more resilient than I ever thought I could be. Today, my business is thriving. We've got 3 employees, a backlog of exciting projects, and a great reputation. And my credit score? It's not 500 anymore. It's climbing, slowly and steadily, with every right step I take. If you're watching this, and you see yourself in my story, if you're staring at a low credit score and a dream that feels like it's slipping away, I need you to hear me. It is possible. Getting funding with bad credit isn't a myth. It's a fight. It takes more work, more research, and more grit than it does for someone with perfect credit. But it is a fight you can absolutely win. Your current situation is a hurdle, not a wall. Be strategic, be prepared, and refuse to let anyone tell you your dream isn't worth the investment. You have to be your own biggest believer before anyone else can be. Finally, I've put together a list of resources in the description below, including the types of lenders I talked about, to help you start your own research. If this story gave you even a little bit of hope or a new idea, do me a favor and hit that like button and subscribe for more real, honest stories about building a business from the ground up. And finally, please share this video with one other entrepreneur you know who needs to hear this today. You never know whose dream you might help save. Keep fighting, and go build something amazing. Thanks for investing this time in yourself. You've got this. If you got value from this video, don't forget to hit that like button and subscribe to NextLevel Credit. Drop a comment if you have questions, and share this with someone who needs to hear it. Remember, it's not just about credit, it's about building your next level. See you in the next video.